Hello friends, this is Raj Sastry from Raj Option Trading. Today is August 9, 2021. I want to cover stock and option purchasing ideas for the week of August 9. We will leverage a TTM Squeeze Indicator by John Carter. It will help us to identify stocks that are going to break out pretty soon. So with that, let's jump in and get started. You might wonder what is TTM squeeze and TTM wave. I will quickly cover this very quickly, and then we'll jump into few stock ideas. So TTM squeeze, as you can see here, we got a chart here. I've got a 1 day 1 year chart, and a 2-year 3-day chart, and a 5-year weekly chart, and a 10-year monthly chart. So as you see here, I've got a wave, which is a shorter term trend, which is the wave right here. This chart right here, this is the A wave, which is a shorter term trend. So when the A wave is yellow, that means it's bullish. For example, you see some yellow line here, that indicates it's bullish. But when you see a red bar, that means it's bearish. You see some red bars here, that's bearish. And also if the wave is above zero, that's bullish. For example, you see a few bars above zero, that's bullish. And when the bars are below zero line, that's bearish. So that's a very quick indicator of how to read the A wave, which is a shorter term wave. Now we'll get into the C wave, which is longer term wave. So C wave is right here. This is the C wave. So C wave measures the long term trend. Once the C wave crosses above zero, for example, here you see all the C waves are above zero. If the C wave crosses above zero, then it's a bullish sign. John Carter says, don't worry too much about A wave, instead focus on the C wave. So when you see a dot here, red dot, or a green dot for that matter, typically red dot indicates the tight compression of volatility. But when you see a red dot and the first green dot, then if the C wave is above zero, that means you can go bullish and buy stock or call option. So that way, it's going to fire on the bullish side. So that's how you kind of look at the TTM squeeze indicator. And I also talked about red dot here. So the moment you see red dot, here you see series of red dots, that tells you at this time there is a very tight volatility compression. So at this time the Bollinger Band is inside the Kelton channel. So basically market is really in a tight compression. Energy has to be released at this point, but we don't know whether it's going to be higher side or bullish or bearish. To identify whether it's going to be bullish or bearish, that's where you have to look at the wave. So if the C wave, which is a longer term C wave, if that is above zero, then it's going to fire on the bullish side or the higher side. But if the C wave is below zero, then it's going to fire on the bearish side. But in this example right here, we got C wave below zero, but as you can see here, it's a light blue line and it's trying to curve up and go above. That's why some folks look at the wave and look at the direction of the wave. Here, because the direction of the wave is trending higher, there's a very high chance that this is going to fire on the higher side or bullish side. The first green dot after a series of red dots, that will indicate energy is going to be released. And you have to look at the direction of the wave to see it's going to be higher or bullish or bearish. In this case, because the wave is curving towards zero line and trending up, that's why it fired on the bullish side or higher side. John Carter says, don't sweat too much. Look at where the wave is. If the wave is above zero, then it's a bullish. If it is below zero, it's bearish. But many folks will look at the direction of the wave and see if it's curving up or curving down. If it's curving up, it's a positive sign. You can try to get, before the trend happens in those scenarios, if you so choose to. So that's a quick explanation of the TTM squeeze and TTM wave. Now we will jump into few stock ideas. So with that, here I got a chart where I have a lot of stocks here, starting from AT&T, and I made sure all these stocks have got very high volume. I did not display volume here, but these volumes are very high, well above 1 million shares traded. And I also have the price of the stock, the market cap, sales and sales growth. So that way, you know, the stock that you're investing has got good sales and sales growth. Then we got gross margin and net margin. You know, many of the good candidates have got nice growth and net margin, and also rule of 40 where quarter over quarter sales growth plus gross margin greater than 40 for ideal candidates. And then we got institutional ownership, the short ratio. Anytime you see short ratio above 10, that can cause a short squeeze and cause stock to go up. And then we got price to sales ratio. Anytime it's above maybe say 25 30, then you know its valuation perspective it's too high. You got to watch out carefully. For example, MVIS right now 100 plus price to sales ratio, you got to be a little bit careful here. And we also have IV percentile. You know, it's good to invest in, if you're buying a call option or even a stock, good to buy where IV percentile is low. For example, you know, this one has got low IV percentile, so is Microvision. And then you got RSI, tells you it's a good entry point. If you're a person who wants to buy call option or stock, it's good to buy when RSI is below 50 or even 55 for that matter if it's a high flying stock. Then we got the squeeze itself, the 1 day, 3 day, 1 week, and 1 month squeeze that tells you is there a squeeze at this time. For example, if there's a monthly squeeze in like AT&T, this stock is going to go up for a couple months if the longer term C wave is above zero. And then we got earnings state, very important. You know, right now we're in the earnings season. You know, many of the stocks are going to announce the earnings or have already announced the earnings. And then you got the performance, you know, 1 month, 3 months, 6 month, 1 year, 5 year. I also included 5 year because sometimes 1 year and 6 months performance could be flaky. That's why I included 5 year performance. So that way, you know, the stock is going to go up and it's fundamentally sound. It's not a one trick pony. So with that, let's get started here. I've highlighted few stocks for you in gray background here. So those are the ones we're going to look at. That's where we have at least a positive bias in these stocks. So with that, let's first look at MVIS here, Microvision. Let me go back to Thinkorswim here. MVIS Microvision. As you can see here. Nice looking stock chart. We got a 1 year, 1 day here. Stock is all the way in the map, up and down. This is one of the famous meme stock, goes up and down pretty drastically, as you can see here. And we got a 2 year, 3 day chart here, same story, up and down. And we got a 5 year chart. Stock has done nothing for a long time, caught fire somewhere in 1130, as you can see here, 2020. And same here, we got a 10 year monthly chart also here. So as you see here, we got a red dot forming here in the daily chart that tells you at this time Bollinger Band is within the Keltner channel, and there is a tight compression of volatility at this point. And we also saw it's got a very low IV percentile. And as you see here, at the time there is a red dot which indicates tight compression of volatility. The shorter term A wave is above zero, that's a positive. Longer term C wave is also above zero. As you can see here, right now it's 2.39, that's above zero, it's positive 2.39. That tells you right now we have the C longer term C wave is also above zero. So with that, at least in the shorter term, 1 year, 1 day, it's there is a high likelihood this is going to fire on the higher side or the bullish side. And also you can see your stock also shot up a little bit in the nearer term. That tells you there is a positive bias here. Then as we scan through here, we got a dot forming here, a squeeze in the forming in the weekly chart here. So that tells you at this time in the weekly chart there is a tight compression of volatility, and Bollinger Band is within Keltner channel at this time. And when this happens, the shorter term A wave is below zero, and it's as you can see here, yellow. It's yellow indicates it's bullish. It's below zero, that means it's bearish. But John Carter says, hey, don't worry, you can ignore the shorter term A wave. If the longer term C wave is above zero, clearly longer term C wave is above zero. It's a 2.11, which is above zero, and also it's a bright blue color, light blue. That tells you it's bullish at this time. So you could go with these two point of view, where there is a daily chart, longer term C wave is above zero, and we got a weekly chart, longer term C wave is above zero. That tells you you can buy stock or call option, and even by looking at the chart, it can only go so much down. It's showing some strength here. So with that, let's go into a different chart here and look at microvision. So as you look at the microvision here, nice looking chart. This is a 1 year, 1 day chart by Thinkorswim 3D Ameritrade. As you can see, there are peaks here. There's a peak here. Right now, stock is kind of in the lower side here, trying to shoot up here. It just took over its 29-day moving average. It's going above its 9-day moving average. So as you can see here right now, from a volume perspective, nice volume. On the balance, volume is trending up. That's good. RSI shot up. That happens when stock goes up like this, as you can see here. And a DMI chart perspective, you got a bullish crossover right here. That tells you stock is going to go up. And then we got volatility pretty much low. This is what we want to see. We want the volatility to be low when this happens, so that way if you're buying a call option or even a stock, volatility on your side, so you can be rest assured, when the compression releases, it's going to be on the higher side. And then you got here a check in money flow that tells you money is flowing into the stock. So with these data points, you could buy the stock outright or call option. So with that, let me go into option chain here and go to microvision. For the folks who don't know what microvision does, you could also look at analyze here and look at the company's history here. It's a developing LiDAR sensor used in automotive safety, autonomous driving. I think that's a very good that's the these days auto stocks are catching up. I think it's good to invest in these type of companies when the time is right. So with that, let's go to option chain here and say MVIS. And typically I like to, if you want to buy stock outright, you could just click on ask here and buy some stock outright. So you'll pay $15.40, and that's one way to invest. But if you want to buy call option, I would recommend going to delta 70 at least or higher. So as you see here, we got delta 72. That's good enough. You could pay $5.10 and buy call option expiring on 19 November 2021 and confirm and send. If you do this, your profit potential is infinite, and you're paying your break-even price is $18.10. If the stock goes above $18.10, then you will start making money. Otherwise, you will lose your you lose the money that you paid, which is $510. So this is one way to play the game. It's a little bit aggressive. You're hoping the price of this stock will go above 18.10 by 19th November. Other way to play is really spread. You could really buy a spread. So right now stock is at 1544. You could buy a 10-20 spread here. So if I do that, I'll go to 10 here and buy a spread. So as you see here, 10 and 20, it's a $10 wide spread. So for this spread, I pay $3.93. So in this $10 spread here, I pay $3.93. Remaining say $6.07 is my profit potential. I'm really more than doubling my money if this trade goes well. So if I confirm and send here, I'm paying 393 and I'm going to make 607, and my break even point is 13.93. As you can see here, my break even is below current stock price. That's a conservative strategy. So you could confirm and send this trade. So basically, you pay 393 to make 607. It's much more than doubling your money. So it's a good way to trade stocks like MVIS. You don't need to keep the option till 19th November. If you have good profit, you could sell this off in between. So with that, this is one trading idea. So let's go into the chart and look at a couple more. So as you can see here, I have got one more here, Sirius XM. Sirius XM is a $6.50 stock, and as you scan through here, we got a squeeze in the 3-day chart. I would, if I were you, I would just buy Sirius XM stock outright. It's a low dollar stock. But if you want to play the options game, as you scan through here, one thing I noticed in the Sirius XM is really the RSI is 51, which is little higher for me, but we could make it work. So let's go to Sirius XM very quickly. Siri. So as you can see here in the squeeze chart, we got 1-day chart, 1 year, 2 year, 3-day, and 5-year weekly chart, and a 10-year monthly chart. We got red dots indicating tight compression in the squeeze chart here, and we got A wave below zero, and we got C wave, longer term C wave above zero. That tells you right now this stock is bullish. So even though we don't have a green dot yet, green dot will indicate energy is going to be released, but we got series of red dot telling us right now Bollinger Band is within the Kelton channel. So with that, at least in the daily chart, there is a positive bias. Then you look at a 3-day chart here. 3-day chart also, we got a red dot forming here. That tells you right now there is a tight compression of volatility. Bollinger Band is within the Kelton channel. And as this happens, if you look at the shorter term A wave, that's above, barely above zero. Looks like it's a minus 0.007, which is a little bit below zero. But longer term C wave is above zero. That's what John Carter tells us to look at. So coast is clear for Sirius XM. From a C wave perspective, it's on the bullish side. And then we also have a dot forming in the weekly chart here. When this happens, if you look at the shorter term A wave, it's above 0.02, and if you look at the longer term C wave, that's also above 0, light blue, which is bullish. And looks like we also have a dot forming in the longer term monthly chart here. As you can see here, 10-year monthly. And when this happens, the shorter term A wave is above 0, longer term C wave is above 0. So with this Sirius XM coast is clear, you can buy the stock or even call option or call spread if you're a spreader. So with that, if you look at a different chart here, Sirius XM, as you can see here, stock has done nothing much. This is one of the reasons I don't like to buy call options for stocks like Sirius XM, because these stocks kind of sort of stay flat for a long time, catch fire once in a while. But with this indicator, best thing is really when the stock is going to go up or down, because we are buying at a point where stock is going to go out of the normal trading range. So with that, if you see here on the balance volume, it's a nice volume here that tells you people are buying the stock here. And also if you look at the RSI is 51, middle of the range. I think it's okay to buy at this time. And DMI tells you right now the blue line is above red line. It's trying to be bullish at this time. And as you see here, volatility is not much. It's a 22 percentile IV rank, so it's okay. It's a low volatility. Even if you buy a call option, you're going to you're not going to pay too much premium to it. It's okay to buy call option also. And as you look at check-in money flow after dropping for a while, now smart money is flowing into the stock. It's pretty much flattish after dropping. So that tells you coast is clear here. You could buy a stock or call option and go from there. I recommend buying stock for stocks like this Sirius XM, which is a low dollars in the stock. So with that, let's go in here and go to option chain. Sirius XM, $6.50. Stock has gone up as high as $8.14 in 52 weeks. So here, if you want to buy stock outright, you could just click on ask and buy the stock outright. But if you want to buy call option instead, you could go here. You could look at delta 70 here, which is right. I think we got 67 and 85. You could go with the 67, which is close enough, and you could pay 90 cents here, as you can see here, and buy call option expiring in 17 December 21. So if you confirm and send, you'll pay $90, and if the stock goes above $6.90, you will break even. If the stock is below $6.90 by 17th of December, you will lose your money. But you don't need to wait till the expiration date. You can trade this option for a profit or a loss even before the expiration date. So with that, this is one way to play. Next, we'll look at a spreading game. So if you want to spread right now $6.50 stock, you could do maybe 4 and 10. So if you look at 4 and 10 spread, look at 4 here and buy a spread. There you go. So if this is a $6 wide spread, as you can see here, you're paying $2.45. Remaining portion of $6 spread is your profit potential. So with that in mind, so if you're paying $2.45, your profit potential is $3.55. So you're more than doubling your money here. And your break even, as you can see here, is below the current stock price. So it's current stock price $6.50, your break even is $6.45. So this is one way to play where you don't put too much money at risk. Your profit potential is capped, but your loss is also capped. So this is one way to play. This is how you play the spread game with the options stocks like SIRI in this example. Next, we look at a couple more here. I got a couple more here. For example, you got Riot blockchain here. It's blockchain stocks and crypto stocks are going up of late. As you can see here, this also has got a positive indication here. Right now, RSI is 58. Stock is 56% below 52-week high. So if you look at Riot blockchain, go back to Thinkorswim here or RIOT. So as you can see here, let's go back to Squeeze Chart here. So as you can see, Riot blockchain stock is clearly got obliterated in the shorter term with all this crypto news and issues around China cracking down on crypto and whatnot. Shorter term, I think, showing some strength in the nearer term. Then we got a 2-year, 3-day chart, same story. It's showing some strength here, and same story, in 5-year and 10-year chart. It's nowhere near its 52-week high, as you can see here. So with that, as you scan through this, we got a red dot in the 3-day chart here that tells you there's a tight compression of volatility. Right now, Bollinger Band is within the current channel, and energy has to be released somehow. So as we look at the shorter term A wave, it's above 0.5584. It's also yellow, indicates it's positive right now. And then we got here shorter term, longer term C wave, that's also above 0. It's a dark blue, indicates a little bit bearish, but it's above 0. It's 16.117. So with that, coast is clear on the right blockchain in a 3-day chart. Now as you scan through here, there is nothing going on here in the longer term. There is no red dot here. So with that, in the 3-day chart, this seems to be positive. It's going to fire on the longer term, longer side or a bullish side. You could buy stock, call option, or call spread. Let's also look at a different chart here. So as you look at the smaller chart here, as you can see here, after trading in the trading range for a while, stock is showing some strength. This is where John Carter's study will come into play. You don't want to be buying a stock at this time somewhere here, because you don't know whether it's going to go up or down. But this indicator TTM Squeeze will tell you what's the best time to buy, when it's going to go out of its trading range. So that's why I like this indicator. It kind of helps you to cut down on waiting time and helps you with the swing trading opportunities. So as you look at the on the balance volume, it's steadily pretty stable here. People are buying into this stock, and RSI is making its way higher. It's 58, a little bit higher than what I like, but I will take this anytime. It's okay. And IV percentile is 22.5. That tells you right now volatility is low. It's compressed. It's going to go higher or explode higher. And if you look at the DMI chart, right now there's a bullish crossover. The blue line is above red line. That tells you there's a bullish crossover at this time, which is good. And volatility is pretty low right now. It's trying to inch up as we speak, but it's a good time to buy this stock here. And as you look at check-in money flow, smart money is now flowing into the stock. That's also a positive. So with that, coast is clear for Riot blockchain. We could go to option chain here, and if you want to buy stock outright, $37 stock, you could just buy some stock and go from there. But if you want to play options game, I would recommend going at least 130 days out, and you could buy delta 70 call option outright here, delta 71 in this example. Click confirm and send. So if you do that, you're paying $11.40 and your profit potential is infinite. If stock stays above $43.40 by the expiration date, which is 17 December, you will make money. Otherwise, you'll lose your money, but you no need to wait till the expiration. If you make some profit in between, you could take that profit off the line and sell the call option. As you can see here, this is one way to play. Your profit potential is infinite, and your max loss is 1140. So if you don't want to play this game, or if you don't want to spend too much money, you could look at the call spread. So if you want to do call spread, stock is at 34, you could do 30-40 spread. So with that, if you go to 30-40 spread right here, you could just buy 30-40 spread here. So it's a $10 wide spread. You're paying $3.58. Remaining portion of $10 is your profit potential. You could confirm and send. So you're paying $3.58 to make $6.52. And your break-even price is 33.58. That's below the current stock price. So this is a conservative strategy. Your max profit is capped, but your max loss is also capped. So with that, you could confirm and send this and go from there. Probably look at one or two more stocks and go from there. So as you see here, I got a lot of stocks here, a lot of my favorites. All stocks are also here, and we'll go to the next slide here to look at a few more. So we got Western Union, AMCR, Tech Resources, ZTO Express, Caterpillar, Levi's, and so on and so forth. So as I scan through here, probably let's look at one where there's a monthly squeeze. For example, ZTO Express, there's a monthly squeeze, and IV percentile is 36. That's on the lower side, and as you can see here, RSI is 46. That's also lower side, and stock has been losing, in 1 month, 3 months, 6 months, all along. But companies showing some positive sales and sales growth. Let's look at ZTO Express and see if it's worth buying at this time. Other one also which we probably should look at is match group. Stock has fallen off the grace of late after the earnings. As you can see here, there's a squeeze in the 2-day chart. First, let's look at ZTO, and then we can look at match and then conclude. So with that, if you look at ZTO here, and let's go to TTM Squeeze Chart. ZTO Express has got a dot in the monthly chart, as we talked about earlier. Monthly charts typically last for a couple of months. And if you see here, we got shorter term A wave below zero, but we can ignore that. Longer term C wave is above zero. That's a bullish sign. So with that, we could see what needs to be done here, and let's go to a different chart here. According to John Carter, this is bullish because tight compression of volatility and A wave is above zero, and after a while you will see dot 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 and a green dot that indicates it's going to fire. But since we know longer term C wave is above zero, there is a high chance that this stock will go on the higher side and bullish. So with that, let's look at a different chart here and go from there. So as you scan through here, nice looking chart. Stock has been obliterated of late. It's going down, down, down. Now there is some strength. As you can see, there's a positive bullish bias here. Stock was all-time low at 25.67. Right now it's at 27.9. There is some positive traction here. On the balance, volume is improving here. That's a good sign. RSI showing some strength here. That's also good. And DMI chart is telling you, hey, you know what, you can expect a bullish crossover anytime because the blue line wants to go up, the red line wants to come down. And volatility perspective, as you can see here, right now vol is 35.4, little bit high, but I would take this anytime, no big deal. And check-in money flow is telling us smart money is flowing into the stock. So cost is clear here. This is most probably going to fire on the higher side. You could buy call option or even stock outright of ZTO. So with that, if you go to option chain here, stock is at 27.90. I could buy some stock right here by paying $28.28. So if you want to play options game here right now, you could buy delta 70, delta 74 is good. You could click and send. So the delta 74 indicates for every dollar move of this stock, this option is going to go up by 74 cents. So with that, you could pay $5 and buy call option, strike price 24.47. So if you do that, you confirm and send here. Break even price is 29.47. That's above current stock price, and your profit potential is infinite. And you're paying $500 to buy call option, expiring on 21 January 2022. You got a lot of time on your favor here to work with. You could confirm and send. If the stock goes about 29.47 by expiration date, you'll make money. Otherwise, you'll lose your money, which is $500. But you don't need to wait till the expiration as usual. The moment you make some good profit, you could sell your call option. If you want to play options spread game, right now, as you can see, a stock price is 27. You could you could do something like probably 20. Let's see here, 21.47 or even 22.47 and 31.47. That's a good spread here. So you could do 22.47 and 31.47. So with that, let's go in here and buy a spread. There you go. So it's almost $10 spread, not quite. You're paying $4.80. Remaining portion is your profit potential. So if you confirm and send here, you're paying $4.80 to make $3.81. So it's almost doubling your money, not quite. If you want to play around a little bit, you could do a little differently. or you could even go with this. This is a pretty okay trade here. So you are paying 391, sorry, you are paying 480 to make 381, and your break-even point is below current stock price. Stock price is 27.90. Your break-even point is 27.56. This is one way to play, but if you want to tweak around this a little bit, you could even go a little higher here. Instead of 22, you could go with 23 and you could also go and go to 34 here, or 33. So this is a $10 wide spread. Looks like this is not traded. So instead of 23 here, you could go to 24.47. There you go. And on the other side, you can go to 34.47. That will make it a $10 wide spread. So for this $10 wide spread, you're paying $395. Remaining portion of $10 is your profit potential. As you change the the strike price, your break-even point is going to go up a little bit right now. So as you can see here, your break-even right now is above the stock price, and that's why it's a little bit little aggressive, not too much, little aggressive. You're more than doubling your money for that risk. So that's why more than doubling your money, and you pay your break-even point now moves higher. So this is the other way to play. You could do this, and let's do one more stock. We talked about match MTCH. So Match, I think stock has been dropping off. It's an online dating website, and as you see here, um, stock dropped after the earnings. Business as usual. After a series of red dots, now there is a green dot, indicates this is going to, it's already fired right now. Compression is basically compression is released at this time. Energy is released. When this happened, we got here a longer term C wave above zero. That tells you right now stock is in a bullish territory. And as you look here into, there is no other dots here. Okay, there is one more dot here forming in a monthly chart or a weekly chart here. At this time, it's a bullish. So that's why coast is clear on match.com at this time. We already have the signal fired. We have a first the blue dot after a series of red dots. That tells you right now we got this signal fired, and when this fired, longer term C wave is above zero. That's a bullish sign. Let's also look at one more chart here. As you look at this chart here, nice looking chart. Stock has been stuck in the trading range for a while, and right now it's at a lower point. And smart money on the balance volume is kind of dropping down, which is very much expected. When the stock falls off like this on the balance volume, it dips like this, and RSI is also low, and DMI right now it's bearish. As you can see, your red line is up, blue line is lower. There's a good amount of gap here that tells you right now stock is full on bearish mode, and volatility is very low right now, 31.3. As you can see here, it's very low at this time. And as you scan through here, check-in money flow is right now um, going a little bit down. That tells you smart money is really going flowing out of the stock, which is the case when when there is a big drop in the stock itself. So with that, let's go into option chain here quickly and see what needs to be done here. So match.com here, as you see here, 145.79. That's the stock price. If you want to buy stock outright, you could just click on ask. You could buy some stock by paying 146.38 times 100 for 100 stocks, or you can even buy lower quantity. But if you want to play options game, typically for these higher price stocks, it may be better to play options game if you want to be a swing trader. So with that, right now stock is at 145.79. You could do 140, 150 spread. So with that, let's go here 140 and 150 spread. There you go. So it's a $10 wide spread. You're paying $4.65, and remaining portion of $10 is your profit potential. That makes it more than doubling your money. If you confirm and send, you're paying 435 to make, sorry, you're paying 465 to make 535, more than doubling your money type trade. And if the stock goes above 145 144.65, which is below current stock price, you'll make money. So this is a conservative play. You could play this game and go from there. And if you want to play option outright, you could buy delta 70, which is right here, delta 72. You pay $23.50 to buy 101 call option that can control 100 shares. You could confirm and send. Your break-even point is 153, which is a little bit above current stock price. Your profit potential is infinite, not capped like the spread game. Your profit potential is infinite. If the stock is below 145 by expiration date, which is 17 December, you will lose your money that you paid, which is 2,350. So with this, this is also a good one. Typically stocks like Match.com, they typically bounce back after this big drop. It happened a couple of times in the past also. So that's also a good play. So with that, let's go back here. I think this is the second page here. You got a couple more stocks here, including DigitalOcean, which is one of my favorites. Right now, I think stock is almost at 52. I mean, 15% below 52-week high. You could look at other stocks like AEO, Caterpillar, so on and so forth. So with that, thank you very much. Happy investing and trading. Please subscribe. Thank you.